We've got some new developments on the Apple story we brought you earlier, being sued by a high-profile video company. Julia Borston's got the details. Julia.
Well, Apple removed Epic Games' popular Fortnite from its App Store, and Epic is taking legal action against Apple, filing suit to end what it calls Apple's anti-competitive restrictions on mobile device marketplaces. It's referring to the cut that Apple takes of revenue from games sold within the App Store. Now, this started because Fortnite offered what it called a permanent discount on in-game purchases made when using Epic direct payments, effectively circumventing App Store fees. Apple saying that Epic has benefited from the App Store ecosystem for a decade, and saying of Epic, quote, the fact that their business interests now lead them to push for a special arrangement does not change the fact that these guidelines create a level playing field for all developers and make the store safe for all users. Apple says it will make every effort to resolve the dispute. Now, Epic says it isn't seeking monetary compensation, but instead saying in its filing, quote, it is seeking an injunctive relief to allow fair compensation in these two key markets that directly affect hundreds of millions of consumers and tens of thousands, if not more, of third-party app developers. Sarah and Wilf, is going to be really interesting to see how this battle between Epic and Apple plays out. Just to give some context for scale, Sensor Tower says the game has reached 133 million installs and has seen $1.2 billion in spending worldwide. Back to you.
Julia, thank you very much for that. And Mike, clearly, as Julia says, will be fascinating to see how this plays out. It's not immediately a game-changing revenue hit, of course, but it could have huge implications for the broader long-term future of the App Store.
For sure. And yeah, not a big revenue hit, probably in any defined time frame that we'd be looking at. However, the Apple story has been one of massively expanded valuation, predicated in part on the fact that it was a much steadier revenue stream and it was services based and it was very much kind of an automatic story. So the question is, does it cause investors to reassess what you're willing to pay if you're going to have a little bit of margin pressure in that piece of the business? Again, even though it's right now not the biggest mover of the needle, it's one of those things that a lot of good has been priced into Apple as it sits on the precipice of a $2 trillion market value.
I mean, it's still closed up on the day, almost 2%, Stephanie. So a report like this didn't rattle it. It does raise a question, though. Apple's considered, Facebook and Google and Amazon, maybe one of the least threatened by analysts and by those that cover the stock from regulatory action. I mean, do you see any worries here about anti-competitive behavior, monopolies in its App Store?
Well, the App Store fees and third-party have been at odds for such a long time. I think you have to just step back, though, for a second and just look at services and how much the margins have been expanding over time. So it will be interesting to see if Apple caves. I don't think that they will. I don't think that they can. I don't think they should, because you're seeing other areas within services grow massively. They beat expectations by 300 basis points in margins in the quarter in the services business. So I think one hit is not going to be material. It's not going to be a big dollar amount. It's more of a sentiment thing. But to your point, stock still ended up on the day.
Gabriella, what do you think about some of these valuations in the biggest tech stocks like Apple, and also this move towards stock splits, and whether that perhaps paints a picture of bubbles in the market?
So we have actually been getting this question quite a lot from our clients. I think there's somewhat of a concern that we've seen quite an increase in technology stocks, and we've been getting the question of, is this a bubble? The truth is that these are very different tech companies than we had back in 2000, 2001. They're incredibly profitable. We're not just waiting on hopes and dreams for their business model to play out. These were themes pre-pandemic. They're getting amplified during the pandemic, and there'll be very important themes after as well, including everything from 5G, cloud computing, artificial intelligence, digital payments. So we still very much believe in the tech theme, and the U.S. market is where we want to get access to that. When we think about further upside, though, when we think about cyclicality, we think about different sectors, that's where we started to think a lot more about adding exposure to certain international regions. Our high conviction is Europe and emerging Asia. So that way we have a balance in the portfolio between tech with the U.S. market, as well as cyclicality with Europe and Asia.